Robinhood is preparing to go public, and that's a big deal for the retail investor. But it could also come with some big risks. Let's get to Kate Rooney with more. Hey, Kate.
Hey, Leslie. One big risk here, more of what happened back in January for Robinhood. In that risk section of the S1, Robinhood talked about customer dissatisfaction, litigation, as well as congressional investigations around GameStop. They also highlighted the need to raise capital pretty much overnight in order to meet deposit requirements. Bottom line, Robinhood says, quote, "We cannot assure that similar events will not occur in the future." And at the time, Robinhood was able to call up its venture capital investors to secure more than $3 billion. That deal was in convertible debt at a 30% discount to the upcoming IPO price. And as a result, Robinhood reported a $1.4 billion loss for the first quarter. That had to do with that debt deal. But as a public company, a similar event could hit shareholders. Robinhood says, quote, "When available cash is not sufficient for our liquidity and growth needs, the startup might need to engage in equity or debt financing, they say, to secure more funds. They cannot be sure that will be on attractive terms, as they put it. And if additional funds are raised through issuing equity or convertible debt, Robinhood stockholders could see dilution." Leslie, back to you.
Okay, so Kate, you bring up a really interesting point, because normally in these prospectuses, the risk factors are largely hypothetical. It's like, if Santa Claus were to hack into our systems, we could see a material adverse effect to our price. I mean, with these actually happen. The risk factors, they're not hypothetical. They happen, and they happen in recent memory. So does that change the risk profile of Robinhood relative to other companies that may be out there?
Oh, this was a big event for Robinhood. You remember, like we mentioned, they raised a massive amount of money within a couple of days in order to keep the company afloat. And at the time, the CEO called it a 5 Sigma event, which basically meant it is a 1 in 3.5 million chances of something like this happening. The idea that it would be in the prospectus as a potential risk of happening again, I think, caught a lot of investors or potential investors by surprise. Excuse me, sorry, dog barking, but caught people by surprise. That's another risk.
Caught your dog by surprise too.
But a lot of risks
I don't
in the
agree with
prospectus
that
overall.
math of the Black Swan event.
She read the prospectus and has thoughts on it, but
we're open to any
a
and
lot
all
of risk
thoughts.
though in that. Exactly.
All right, Kate, we appreciate it. Take care and have a great 4th of July weekend.
Thanks, Leslie.
Let's talk more about Robinhood's big plans to go public. Joining us now is Justin Zhen, co-founder and president of Thinknum Alternative Data. Justin, great to chat with you again. I'm curious what the sentiment is right now on Robinhood with regard to, on Reddit with regard to Robinhood's IPO. I ask because they say in their prospectus that they're allocating anywhere from 20 to 35% for retail investors. So do retail investors actually like the idea of this deal?
Hey, Leslie, thanks for having me. So right now, the sentiment's really interesting. So Robinhood's not public yet, but the chatter on Wall Street Bets has already been tremendous, more than actually like any other stock on there that currently exists. Most of the sentiment is relatively positive, but there's still a large number of the community that remembers the GameStop fiasco, and the sentiment there is obviously quite negative. So I think it's going to be really interesting when the retail audience gets the chance to participate in an IPO in such a way, which is quite rare.
So did I hear that right, that the chatter about Robinhood is actually more than any other stock on the platform right now?
Right now it is, yes.
Wow. And because I think you bring up a good point. And, as someone who followed that GameStop saga very closely and found, some late evenings on the Reddit boards, I did notice that there was a lot of commentary even back then about Robinhood, its prospective IPO, and what that might mean. Just kind of broadly speaking, do you think retail investors are going to be bigger participants in IPOs if they have more access to it? Is IPO something that people are even talking about being interested in getting allocation to? Or do you think this is kind of more of a Robinhood specific aspect to their deal because of the nature of their business?
Yeah, I think more retail investors will have more access to IPOs. I think Robinhood is being a pioneer here in a way. But I think retail investors also have to do their own due diligence. It's kind of like just because something that wasn't previously available is now available to you doesn't make it a good opportunity. Recently, IPOs, especially tech IPOs, have done very well, but there are many that have not as well. So I definitely encourage all investors to really do their homework.
Yeah, and we've been teasing this all show, in addition, obviously, to Robinhood, which sounds like it's gotten a lot of attention on Reddit this week. What other company, what other new name is rising through the ranks in terms of trending topics?
Yeah, so one name that's cracked the top 20 recently is Alibaba. Alibaba got hit hard in the tech sell-off a few months ago, but it's in the top 20. If you look at the alternative data, they've actually been expanding very heavily in the last 2 months. The number of job listings they have is up over 40%. So the company is in pure expansion mode. And I think Redditors or Wall Street bets are taking notice.
It appears to not have moved the stock price yet, but a pretty big float for Alibaba at this point in time. So it's definitely one to keep an eye on. Justin, we appreciate it.
Thanks for having me.
Shepard Smith here. Thanks for watching CNBC on YouTube.